Decentralized Finance, Global Trends and Solutions for the Unbanked. C'est un problème énorme et nous avons besoin des solutions aujourd'hui avec nos panélistes. Fortunately, our moderator is Mr. Einstein, Gordon Einstein, the founder of CryptoLaw Partners. Smart guy has got to be able to find some solutions. He is going to be joined today by Jorge Sebastiao, who is the CEO of Nimbus DeFi, as well as Kanyiri, who is the founder and CEO of Data Functions. Also, Alex Nascimento is coming to us from California, where he is the founder of UCLA Blockchain. We also welcome Nitin Gaur, who is the director of IBM Digital Asset Labs. A great panel, hopefully coming up with some great solutions for the unbanked.
Everyone, it's Gordon Einstein. I am happy to be here with you for Africa Blockchain Week. Unfortunately, I'm not in Africa. I'm in Mykonos, though that's not really unfortunate. I'm very happy to be joining you today virtually, but my heart's with you wherever, whenever you're watching this. And yes, I'm wearing glasses. Our panel on decentralized finance, global trends and solutions for the unbanked. So DeFi, or decentralized finance, is of course a very hot topic. It's changing the way the world works. One thing we might cover today during our panel is Mark Cuban's blog post that came out today, which I think may actually open up the world of decentralized finance. But before we get into our questions and answers and our panel discussion, of course, we need to introduce our panelists, our esteemed panelists, I might add. And as I always like to do during panels, I don't want to just know that what our panelists are currently working on or what their current job is, but I want to know a little bit of their background story. Or if you're a fan of Marvel movies or Marvel comics, the origin tale, like Wolverine. Each one of these panelists is a superhero like Wolverine is. So we need to know a little bit of their background. Actually, and John, I think we're going to start with you. John, please, name, rank, serial number, and then how did you get into crypto? How did you get into DeFi? And what's your Africa connection? And please go ahead.
My name is John Kanyiri. I'm CEO of an organization called the Data Functions. I'm also involved in the blockchain called Freeton Network, which we started the African chapter. I started my financial journey in the early 1990s. I've been an accountant. Then I did business administration. From there, I started this IT organization. I specialize in data analysis and recovery. So my journey into the blockchain space started in 2019. And I was doing the Forex trading and crypto trading. I read a lot about the blockchain space. And in 2020, I joined Freeton after started this organization after they were denied the license in the Telegram group. So there my journey started. And since I had the financial background,
I'm sorry, what does that mean? They were denied their license in the Telegram group?
Yeah, the initially Freeton was started by the Telegram brothers of Durov. And when they did an ICO in 2017, they got into trouble with the American regulators.
Oh,
yes. Then I joined them thereafter. I wasn't there during that time, but I joined them thereafter when they relaunched, the community relaunched the blockchain. And since then, I've been leading the African chapter on generally the whole blockchain space, not just the DeFi. But since I had this financial background, I was interested in the DeFi space, and I've been involved in it since then. Yeah, basically that's my background.
Yes. That's an amazing background, and I'm a fan of Telegram and the Durov brothers. George, I'm gonna embarrass you again. I call you the mayor of Dubai because you're the man with the connections, and now I see you're the mayor of several other places as well. Please tell us your origin tale. And
Boy, it's a long one, but it's a funny one.
Yeah.
Well, I had the chance of moving to the Middle East about 25 years ago. I'm a Portuguese Canadian, so I speak a number of languages. And as a result, I ended up visiting over 35 countries in Africa so far, out of 65 world countries. So I'm lucky enough to speak English, French, Portuguese, and Spanish, which I think covers probably most of the countries in Africa. I think there's only one speaking a bit of Spanish, but a few speaking Portuguese, quite a few speaking French and English, apart from the local languages, of course. I had the chance of visiting many hospitable places, like, for example, Morocco. I went for a week. I ended up staying a year and a half. So it's an amazing place with tremendous food. A lot of my work in Africa has dealt primarily with telecommunications, a lot of work in satellite, both with African Union, World Bank, but also with the telecom operators, including Zain and the transfer to Airtel. And as a result, I was involved in the early days of what you call mobile money, which eventually became M-Pesa and many other things, which today we see variations that have made it into the crypto world and eventually the DeFi world as well. But I think in some areas, Africa, because of not having the legacy IT systems, has been an early adopter and forms of creative usage of technology, in this case, for example, mobile money, that kind of, in some cases, put them in the forefront of some of the things that we see today.
Yep, and actually, we're going to do a deeper dive on that when we go to the general questions. But you're right. I think Africa is uniquely situated, just like it was with, since they didn't have landlines with phones, and you go straight to mobile. It's interesting. Alex, it's been a while. Good to talk with you. I think it's been almost a year, but not quite a year. And even though you're from my hometown of Los Angeles, I don't think you're in Los Angeles now, despite your background. So
yeah, no, we've been teaching online. The university will continue to teach online until the end of the fall. So I've been taking the chance to go around the world and still do some of the conferences that are going live and meeting some of our clients at 7cc that are abroad. So I'm currently in Rio de Janeiro.
You're having a rough time, obviously, and not enjoying life at all.
No.
So tell us a little bit, we'll get to the main topic in just a moment after we go to Nitin, but tell us a little bit of your background. I mean, obviously UCLA, but what led you into blockchain and crypto and DeFi?
Yeah, so I was a tech startup investor for already like about 10 years. And then in 2017, with the rise of the popularity of Bitcoin, myself and a few out there faculty members at UCLA started the UCLA Blockchain Lab, which is now blockchain at UCLA. Like, we're over 400 student strong organization, worked with a number of different enterprise clients and also foster education cross campus and cross different schools. So our focus was always on the thesis that cryptocurrencies and token issuance would go mainstream if it would have the support of institutional investors. So we've been working on security tokens. We wrote a textbook, the STO Financial Revolution. And now DeFi is definitely something that is sparking the interest of many financial institutions. So
very interesting. And of course, you're begging the question, which we won't get into yet, which is, does DeFi disintermediate the financial institutions so their backing is not necessary, or are they going to evolve into something, or is there some kind of blend that's going to happen? So I know you want to respond to that, but let me get to our last, but absolutely not least. First on, there you go. Nitin, hopefully I'm saying your name correctly. Please introduce yourself. Give us the origin tale.
Yeah, thank you, Gordon. So my name is Nitin Gaur, and I serve as Director of Financial Sciences and Digital Assets in IBM. I founded the Blockchain Labs and then subsequently founded Digital Asset Labs to bring the concept of digital assets to this technology platform. My foray into blockchain and eventually Bitcoin and eventually DeFi started in 2012, so early days. When I was trying to build this payment system for what we're calling as payment tokenization, which is pre-Apple Pay, is figuring out what is how do you reduce friction. And in that conversation, as I was designing that system, I met about 65 of the largest payment processors, and blockchain, Bitcoin kept coming up in every conversation in terms of the future of payments. So I hunkered down for 3 to 4 months, try to understand the entire systems. And then you realize that, this is something really cool and truly a financial system. But then we realize that all Bitcoin does is transfer value. And how do you make it shift from just movement of value, which is payment related, to something which is much more decentralized? And that's when we begin to look into that, what does programmability mean in that sense? And if you can do that for money, which is a thing of value, how do you expand that to other asset classes? And so I got into decentralized financing in 2016 when we began to talk about the use of smart contracts and how do you trap the value and how do you truly democratize it. So that has been a journey, and I've not stopped since. I can't get enough of it. So happy to be here and talk to the esteemed panel.
So I'm going to throw a complete curveball. Do you think Bitcoin is fundamentally unable to do the sort of complex transactions that DeFi calls through, or can its scripting language be developed to that point? Or are we in an Ethereum clone world?
No, that's a great. So Bitcoin just does one thing, right? It just transfers a value, and it mimics the whole notion of unit of account, transfer value, store of value. But in the traditional financial world, you're not simply moving value for the sake of moving value. There's always a duality for transaction. You're exchanging things of value, and there's a fungibility to how we use payments, and payments sort of creates that whole lineage of connecting the exchange of various things of value: mortgages, bonds, stocks, real estate. And so while Bitcoin is aiming to solve the last mile problem, the fungibility and the settlement piece of it, you still have to realize as to how the other things of value moving in the system, which Bitcoin itself doesn't solve. And I think creating a parallel ecosystem, which Bitcoin itself from a technical perspective doesn't have some of the elements of what Ethereum and many of the competing platforms are trying to bring to bearing, which is asset tokenization, creating elements of smart contracts, providing programmability elements to it, which was sort of missing piece from the Bitcoin ecosystem. So while Bitcoin fueled this entire ecosystem, I think we begin to see that growth and intersection between these various networks, if that makes sense.
No, it does. I'm channeling my inner Bitcoin maximalist who would argue that scripting is underappreciated, but yes, it's very hard to tokenize on the Bitcoin blockchain and have true smart contracts. But I don't want to go too far deep into that one. So Alex, you telegraphed one of the questions I wanted to get to, which is very highly relevant, I think. Is DeFi a challenger for the incumbent of centralized finance? Is it something where centralized finance will eventually become DeFi? Like, where do they fight? Do they mix? Like, what's going to happen?
That's $1 billion question. But
or $1 trillion question.
Right, $1 trillion question. But if history plays as guide, we'll probably see financial institutions integrating cross borders. Because, for example, you have Citibank across different jurisdictions, right? So if you talk about something like yield bouncing, which is one of the bedrocks of DeFi, why couldn't different financial institutions, especially the ones that are under the same group, do yield bouncing based on jurisdiction? You mentioned that I'm enjoying Brazil. Well, I am, and historically Brazil has been a major market for interest arbitrage, right? People would take loans in the US with very low interest rates and repackage and resell these loans in Latin America at much higher interest rates. So that was something that was offered only to institutional and professional investors. I don't see why that model cannot be offered to the general retail investor.
Fair enough. And what do you think about El Salvador adopting Bitcoin as a national currency? And I guess my next part of that question would be, if other countries do that, aren't they doing sort of an end run around a monetary union? Aren't they accomplishing what the EU accomplished with the euro much more easily without having to negotiate some big international treaty amongst themselves? And is that a form of DeFi?
Well, that would, right? The only thing that worries me a little bit, and I think it's as you get more and more institutionalized, historically, you will see less volatility on an asset class. is that countries like El Salvador or having Bitcoin as a tender currency might suffer like the volatility of the asset. Now, how do you mitigate that is issuing derivatives that could be based on that asset class. So I think that we'll see a continuing greater interest of institutional investors and governments in Bitcoin and in digital assets. NFTs is a very, very elegant solution for financial products.
Well, and let me throw this at you. You know, yes, volatility makes it difficult for Bitcoin to be a national currency, but the more you can pay for real world assets in Bitcoin, the more it becomes anchored to fungible goods that have that themselves are price stable, and that might in fact offset the volatility of Bitcoin. I mean, if you know you can buy this land for a set price in Bitcoin, and that's not going to change despite what it's in dollars, that kind of puts an upper and lower bound on the value of the Bitcoin, and eventually might tighten in to a narrower band as it goes more adopted as a national currency.
Yeah, as you have bigger players with bigger pockets playing in the market daily, you minimize the spread, right? Markets get more efficient and you have less arbitrage. So I agree with you. I think that that's probably what we're going to see in the very near future.
So can I take a comparing view on this, Gordon? Because
sure, please.
We looked into Gordon, and we looked into El Salvador. I've been there many times. I don't know how many of you've been to El Salvador. Beautiful country. There are a few things that IMF has questioned those things, and as long as you're dealing with translation, which is basically exchange mechanism between a fiat and Bitcoin, it'll always be a problem. One, there's a digital penetration issue. If you're trying to create a sort of a payment instrument and make it ubiquitous, then there has to be understanding of how do you deal with that payment system by the masses, the people who live in the country, people who have to pay for things. I don't know if you've been to El Salvador, but
I have to go now. Based on current developments,
they don't have a lot of digital penetration. So there's an access to point of sale systems. So you begin to see that just by announcing a policy and not being ready for it from a digital ecosystem that allows for transfer, not to mention the bandwidth, not to mention the technical infrastructure, the fact that the overall M1 supply is about $400 million, all of it in El Salvador, so you begin to look into market depth, and if Bitcoin can eat their lunch because you make it possible, and the ramification of some of the policy posturing. I don't know if they've done enough work in understanding the ramification and understanding the underlying infrastructure needed to make that happen. Certainly, as an enthusiast, I'm really happy, really glad. I just want to make sure that the people of the country are benefiting from it, and it's just not a rhetoric.
But they didn't replace their national currency with Bitcoin. I think they made Bitcoin also a currency.
Agree, which means that you need to have a parallel, which means that suddenly now you're creating competing currencies. And if you've been to Cuba, if you look at the Cuban element of having two currencies, which is one for tourists and one for locals, it creates an interesting, element of capital controls, as well as the monetary supply, which is an area that many of the central banks have been studying for 4 to 5 to 6 years. And I don't know if that work has been done. So I'll leave it at that for now, but it's great.
No, it's valid, because the theme of the panel is bringing banking to the unbanked. And you're raising an interesting point, which is, on one hand, you can operate Bitcoin just on your wallet and not need a bank. On the other hand, you can operate Bitcoin, or you can operate a wallet on your phone and not need a bank. But then again, you need a phone, and you need bandwidth for that phone. Right. If I open up my, my Exodus wallet and I have no internet connection, it's not going to do me any good. So,
right. And maybe George and John can provide a perspective from M-Pesa's.
I was going to them right next. So, John,
yes,
you are actually on the center of my screen. So, I feel like you have something to say. I won't even ask you a question. Just go.
Yeah, I just heard George say he's in telecommunications and he's involved in M-Pesa and all that. Actually, I'm in Kenya, and that is where the M-Pesa was born. Well, what I know is that M-Pesa has done great in bringing the unbanked into a kind of a mainstream, whereby you can link your phone to your bank. The challenge basically comes when it comes to regulation and, of course, the taxation part of it. But going forward, looking at M-Pesa as one platform which is very successful, It has around 20 million users in Kenya. And recently, the Kenyan M-Pesa platform has teamed up with the Ethiopian government. And yesterday, we had the Tanzanian president actually kind of endorsing cryptocurrency. So within that space of the unbanked, I see very great potential. When you come to blockchain and cryptocurrency, you're also looking at the cost, the speed, and obviously the trustless element of doing those transactions. So this decade actually being a DeFi kind of, we had the information and the data era last decade. So this decade being the DeFi, I can only see growth in it. The challenge is coming when it comes to regulation. Of course, we're also thinking about taxation, but in Kenya for now, we have a task force that is actually working towards bringing cryptocurrency, the blockchain, into the mainstream. I know George has got some kind of more information towards
George,
that.
please.
Yeah.
Well, I wanted to add a few things on a few of the topics that we have discussed so far. The first one, I wanted to just brief very quickly about the DeFi aspects and the smart contracts. In Bitcoin, although smart contracts have been only very small present there, uproot as a change is going to radically enhance some of the functionality of Bitcoin, maybe not to the level of Ethereum, but it will enable a whole new generation of potentially smart contracts and layer 2 enhancements. That's number one. Number two was regarding the aspect about acceptance of Bitcoin in places like it happened at El Salvador or the savior. Well, maybe it's only half a savior in the sense that the country maybe jumped the gun a little bit on the announcement. It's very good for the price of Bitcoin on the short term, but not necessarily is going to radically change or transform the country because it's based on an infrastructure and an ecosystem that has not been put in place. It's not because you make something legal that people can use it the next day. And that brings me to the point of not just M-Pesa, but actually mobile money that was also very heavily used in places like Nigeria and Kenya. And it was quite interesting because when I first arrived in those countries, it was amazing that although mobile payments were something not existent even in Europe, which had the technology to do so, if I take a taxi either in Lagos or in Nairobi, you would be able to pay for that taxi with your mobile credit. So that means it's nothing to do with cryptocurrencies. It's purely a digital form of an asset that became automatically accepted and traded. But it means that there was a whole ecosystem in place that got put institutionalized, not even by law, which means that the guy who collected all this mobile money at the end of the day would go to the mobile shop and would trade his overall mobile credit for cash. But it created a system that worked. So the point I'm trying to say is that sometimes usability is as important as technology. And we have to think that in places like Africa, the most convenient mobile is still not a smartphone like the ones we have in our today's digital wallets. It's maybe something like a very basic Nokia phone. So you need to be able to have a system that supports these multiple or the lowest common denominator technology so that you can actually get acceptance and usability of that technology in the marketplace. So I think the same thing is to happen in El Salvador. So you need connectivity, you need penetration of these devices that enable to actually use that technology, and you need an ecosystem that absorbs the entire system from end to end.
Let me agree with you, but let me also throw something in there, which is the mere act of making Bitcoin legal tender in one country fundamentally changes its tax and legal treatment in almost every other country on the planet. Like in the United States, under the Uniform Commercial Code, foreign currency is treated as money. And there's a question about the legal nature of Bitcoin. The fact that someone can now argue that Bitcoin really is money and there's no way around it under state law in the United States, because it is now foreign currency. It hasn't been argued out yet, but this argument never had a legs before. Now it does. Okay, now someone can say, "Oh, it's just El Salvador. They're crazy. Who knows?" But what if Paraguay does it? What if Bolivia does it? What if Iran and Sudan do it? Eventually, enough countries are doing it, even if they're not like the tier 1 players, that it's going to force the hand of the larger economies, even if the infrastructure is not in place in the smaller economies, to actually make full use of it. So I think it's a little bit of a revolution. I hear what you're saying about the infrastructure needing to be in place, but I think it's almost a little bit of lawfare going on here.
The camel straw.
Yeah. Alex, I feel like you want to.
No, you have a very good point, Gordon, because these countries historically have been energy rich and cash poor, or energy rich, economy poor countries. So if you look at countries, you gave a really good example. Paraguay, right? It's a developing nation, it has a ton of excess power. It would be a leapfrog for that local economy. And Venezuela is another country that is bounded to be disrupted by Bitcoin. So you might see, as we go into the later part of this year, where we might see another rise in the price of Bitcoin, another pump. I hate to use that word, but we might see another pump at the end of the year.
Let's say an upward correction.
Yeah, an upward correction is a very good and political way of putting it. You might see the interest of these nations to have access energy to now store that energy in Bitcoin and then use it as some kind of a backing for their economy. So I think that what you're proposing is completely doable and something we most likely will see in the short term.
I like how you put that. They would store their excess energy in Bitcoin. That's interesting phrasing.
No, but I can tell you it goes even beyond that. One of the things that happened when China started banning miners, a lot of the miners ended up in Iran. And guess what? Iran has got a big surplus of energy. And all of a sudden, they're under US dollar embargo. The only thing you have to do is you burn energy, you make Bitcoins, and all of a sudden you got another form of tradable or exportable currency or liquid asset that is very difficult to stop. So it changes the rules of the game.
Yeah, one thing on that, George, to your point, any currency is a belief system. And I think, Gordon, you mentioned earlier that if some countries begin to legalize, this is a payment instrument, and legalize Bitcoin per se, as an acceptance vehicle, you suddenly begin to see this emergence of a new belief system, which will fuel the growth and fuel acceptance and fuel. But to me, there's an underlying theme that the countries and the ecosystems and jurisdictions that are either preparing the infrastructure or sort of kick off this from a legal framework perspective, I think are also better positioned for a much more better digital value future. What that means is that you're building an infrastructure, you're integrating them into your financial systems, you integrate them into your other sort of personal financial systems, which is your personal accounts and unit of accounts. Suddenly you begin to see that if they're prepared to handle a digital asset, vis-a-vis Bitcoin, for example, they are much more better prepared to handle other digital tokens, DeFi tokens, DeFi assets. And you begin to see a much faster evolution of that ecosystem in areas that are more accepting of digital assets than trying to ban a currency or trying to ban a ecosystem, because there's no stopping some of these revolutionary ideas. To me, that's more important than simply, being an enthusiast, not exactly a maximalist, Gordon, not like you, but in many cases,
I was just channeling my inner maximalist, like,
but to me,
I'm a duopoly.
Right, and that belief system is contagious, right? Because you suddenly see unshackling of many of these friction that we are trying to alleviate from the existing financial system. But nonetheless, you still have a regulatory framework, you still have capital controls, and countries who are more to lose from this will try their best to sort of create moats around their economies. And is an interesting way to look at it, I think.
Right. I mean, maybe this is bringing, to the topic of the panel, maybe this is bringing banking to the unbanked. And the fact that there are so many unbanked now who can become banked through DeFi and crypto projects it's kind of maybe a little bit of a guerrilla insurgency against the incumbent systems. I mean, there's this huge untapped market of people who don't have full access to banking services, and it's great that you can do some things on your phone. But that's, I don't know if that gives you, I haven't used those applications, so I'm speaking a little bit from ignorance, but I feel like they don't have the complete depth of traditional banking. But I don't know how much of that is needed.
So what is the problem with unbanked, right? Unbanked, underbanked. I think, so I've traveled just like George to 140 plus countries in studying some of these. This is pre-COVID, of course. And I think, and I'd love to get, again, John and George's perspective on this perspective. I think the bigger challenge with unbanked or underbanked is digital ID and digital penetration. I think it's less about the fact that banks don't want to open an account. It's just that the access to financial system is not there, whether it's education, whether it's digital penetration, whether it's digital ID, which are some of the things required to open a bank account. If you don't solve that, I think by many of the Bitcoin, they'll give you a wallet, which becomes an identity construct, but you still aren't solving the problem from its roots.
Yeah, I would chip in and say the first thing is the acceptance, like the belief, that this currency works. But in my experience within the space, within the blockchain space in the continent, the first thing is how is blockchain relevant to the communities? Like at Freeton, we bring in use cases. We call them use cases. We encourage developers to have use cases. Then in that particular process, you educate the masses about the benefits of blockchain. That's DeFi being one of them. But for you to be able to get into the communities themselves, you have to engage in solving their solutions in these communities through blockchain. Like let's say something like identification, communication, and all that. So there's element of decentralization and also involving these same communities in decision making. Yeah, they can bring their projects, the blockchain will look at it, and then there will be a vote or something like that. If it is accepted, it's funded. And then these people start seeing a different kind of, a different space, the blockchain space, solving their problems. From there, it's where you can now bring in, solutions like finance and basically handling the what we call in Africa table banking. Like we have the concept of table banking, whereby people form groups and they save and they borrow from the same pool. So the blockchain being through the smart contracts is quite beneficial to these people when it comes to, the element of trust, accessing banks, the cost of these transactions, and also the ease of lending, because generally in Africa, the interest rates are so high. But within the DeFi space, the interests are reasonable. The returns are high. So when people start seeing the benefits of these platforms, slowly they are adapting. There are so many questions. Now, as a blockchain, the most important thing is to educate people about what blockchain is. Because anytime you go and talk about Bitcoin or Ethereum, they don't understand the technology. They only know Bitcoin is there for transfer. I think what mostly the unbanked need is that education. Obviously, with the penetration of internet and the low cost of the same, it will be another advantage, and the space can only grow from there. Maybe George can add something.
George, you're up.
Well, I believe that although we keep always sometimes referring banking for the unbanked, I do not necessarily believe that the unbanked want to be banked in the first place. I think they just want to have access to services and payment systems that make their lives easier. It's really about payment systems. So if we turn a wallet, a simple one, into a point of sale device, and you enable frictionless payments like QR codes, yes, blockchain adds an extra layer of trust with or without blockchain. You add DeFi, you can do also maybe micro payments or micro loans. But at the end of the day, what you're doing is you enabling that startup culture that is already in Africa. Everybody in Africa is an entrepreneur. Even the guy that comes next to your car selling some new gadgets when you stop at a red light. But if all of a sudden this person can receive payments in some kind of frictionless way, almost instantaneously, instead of looking for change, you're dramatically changing or accelerating the capability of that person to conduct its innovation business or its startup business. So I see this technology is more as an acceleration, not necessarily banking the unbanked, but enabling acceleration of transfers and payment systems and innovative forms of either interest, microloans, or even insurance capabilities that otherwise these people don't have access to.
But isn't that like the basis of banking the unbanked?
Yes, correct. But it's kind of a virtual banking for the unbanked rather than to.
Or maybe, George, what you're saying is the sort of there's a cluster of services we normally put in the container we call a bank in our mind, right? But people don't necessarily want the bank. They just want the unique the services, and maybe they don't want all their services.
Yeah,
and
they
maybe,
want the ones
maybe
that help them.
They made this container object we have in our mind is sort of a legacy concept that's constrained in our thinking. That wasn't rhetorical. I'm asking whether that's possible.
No, it is. And at the end of the day, they want not just the services they need, they want affordable services, because in many cases, and especially in places like Africa and Latin America, things like microfinance is charged exorbitant loans amounts, which they shouldn't just be the case. So technologies like DeFi can dramatically change the rules of the game.
You know, we're on this point here, and I think I agree with you, George, but I think that there is a layer of services that it goes beyond just a simple payment, right? A great example is custody. If you are living in a place that it's dangerous, that has high rates of mortality or robbery or violence, how do you store the money you save? Like you need some sort of financial institution and connections to that financial institution. Another example, like you want to travel from one country to another one in Africa. How do you pay for that transportation? How do you hop on an airline if you don't have like a certified identity, or if you don't have a credit card today? Like obviously, as we evolve, hopefully we'll solve that problem. But I think
and by the way, George, you have 2 minutes to answer that question, because then our panel is over. So you have 2 minutes to solve humanity.
Actually, one of the great things that Africa does is they change the rules of the game. And I think one of the biggest things that has happened to Africa, the same way Europe did and the same way NAFTA did, there is now a free trade agreement across all African countries, maybe with the exception of one. And this is going to change radically the way goods move across Africa. It's going to radically change the way integration of payment systems and transportation. And I think if they achieve, even in a modest way, this integration, I think Africa is looking very good for the next couple of years.
There you go. Okay, and on that note, yes, we're going to be on time because we don't want to cut off the end. I want to thank our esteemed panelists for sharing their wisdom. This was a wide-ranging conversation, part of Africa Blockchain Week. DeFi bringing banking to the unbanked, and of course we covered that, and we covered much more. So I salute you all, and just want to say thank you and talk soon.
Yeah, okay.
Pleasure to be here, always.
Thank you.
Thank you, Gordon.